Here, Maria, most of these names in the consumer space were down today, but still up for the week. Back to you.
All right, Bob, thank you so much. Joining me now to talk more about investing today, Heather Hughes back with us from Sun America Funds, Eric Marshall from Hodges Capital Management, Jim Lowell from Advisor Investments. Good to see everybody. Thanks very much for joining us.
Hi.
Hi there. So I guess the question of the day is, first off, what happened at the end of the day? Eric, what's your take on a market that certainly got tired by the end of the day and the selling really accelerated here?
Yeah, you know, the market has been near a 13-year high, and that's created a lot of momentum in the market. And we think it's probably been due for a little bit of a correction here to kind of reset sentiment. At the Hodges Funds, we try not to get too caught up in the short term. We do think over the long run, stocks still look attractive relative to valuations.
Okay, so still attractive relative to valuations. I want to talk about that because a lot of earnings are coming out. I want to get your take on earnings. Let's right now, though, get to Dominic Chu. He's got the Groupon numbers and Priceline are also out. We'll take a quick move over to Dom Chu as we continue looking at stocks. Dom, over to you.
That's right, Maria. So Groupon shares, we're down about 5% in the regular session. They're tacking on another 4 or 5% in declines in the after hours. Groupon's numbers come out. 2 cents per share in terms of earnings, adjusted earnings per share. That beats the average analyst estimate of a penny per share. However, and this is a big one, sales coming in light, $595 million in sales. The estimate was for $616 million. Groupon also providing some guidance with regard to its full year 2013 operating income of between $72 and $92 million. They also make a statement about an acquisition. They're going to buy Ticket Monster, which is a South Korean e-commerce company. They will pay $260 million. That's $100 million in cash and $160 million in Groupon shares to finance that purchase. But you can see right now investors pushing shares down about 7%. It's worth noting, Maria, the options market was pricing in a possible 14% move in those shares on the heels of earnings. So Groupon down in the aftermarket, Maria. Back over to you.
All right. Thank you so much, Tom. We've got Priceline.com out as well with earnings. Sheila Dharmarajan is with those results. Over to you, Sheila.
Hey, Maria, we are seeing Priceline shares trade sharply lower in the aftermarket. In fact, it is below that $1,000 level, and it's all due to the outlook. The company's outlook for the fourth quarter was disappointing, between $7.80 and $8.30 a share on the bottom line. Revenues also a conservative outlook. When it came to the third quarter, though, the quarter they just reported on, it was a pretty solid quarter. Profits beating $17.30 a share versus estimates of $16.15 a share. Sales also coming in higher, $2.27 billion versus expectations of $2.22 billion. And also gross bookings was higher than expected, a 37.5% increase at $10.8 billion. But again, the street right now is all focused on that outlook. The stock right now is sinking, in fact, $9.60 a share, so well below that $1,000 share mark. We had already seen a lot of weakness in Priceline shares today. Momentum right now for that stock certainly seems to be off. Back to you.
All right, thank you so much, Sheila. Back with Heather Hughes of Sun America Funds, Eric Marshall, Hodges Capital Management, and Jim Lowell from Advisor Investments. Jim, what's your take on the earnings story so far?
You know, I think what we've seen is slightly slower, lower growth. That certainly matches with what we're seeing inside the economy. Today's GDP number clearly reflective of the fact that businesses and consumers are slowing down their spending a bit. And then, of course, across the pond, that surprise rate cut, echoing the sense that this really is a recovery that is still tentative at best. Nevertheless, it is still a recovery, not just domestically, but globally. And we think that generally bodes well longer term. I think today's selling looks more like just a wave pulling back, not the beginning of a receding tide.
So in terms, Heather, you want to jump in?
Yeah, you need a breather right now. If we're going to head higher in stocks, we're going to have to grapple with a bull whose characteristics are becoming inherently more risky than normal. So that's why you're seeing a shift, into some of these value plays right now. Investors don't want to take on risk amid still we had gross domestic product at GDP print of 2.8% today, but there's still slower growth in the economy aside from homes. One strategy that seems to be maybe back in favor is that Dogs of the Dow strategy. You take the 10 highest yielding names in the Dogs of the Dow. Once a year, you rebalance. It's pretty simple, and that may come back in favor.
Yeah, so what do you do then in the environment? Yes, go ahead.
Well, I mean, I don't think that you have to do something like the magic trick of dogs of the Dow. All you need to do is really focus on managers whose track records of picking stocks wisely and well and being diversified in terms of both growth and value names delivers to the investor's bottom line over meaningful time periods. This is not a market that's shaping up to be a net sell. There are many opportunities, even inside technology. The kinds of names that are selling off the most are precisely the kinds of names that ought to be selling off the most, as Bob Pisani pointed out. They are the momentum stocks, not the stocks whose fundamentals continue to look relatively well valued, especially relative to the broader market.
All right,
yeah,
so
I mean, I would argue that the momentum stocks are selling off, so I'm not saying it's some sort of magic trick. It just seems to be a consensus in the retail space that has worked for the past few decades in terms of some sort of strategy without giving specific stock advice.
Yeah, well, what about specific names? Eric, what do you want to be hiding in? Is if, in fact, we are moving into a period where there is more volatility and the economy sort of weakens going into year end, are there any places to hide?
Well, we would agree that you should be cautious of the momentum areas of the market. But as bottoms-up stock pickers, we think you could find opportunities in industrials and transports. You could even find opportunities in pockets of technology and consumer discretionary. And we like things like commercial metals, which is benefiting from a recovery in the steel business. We also like retailer Zales, which is undergoing a major turnaround. We think that they could do well regardless of what happens with the macro conditions out there. And Ferro Technologies, which is a 3D measurement company that is basically an industrial technology. It's not as exciting as Twitter, but these are the type of names that if you look at them on an individual basis where you can find opportunities in this market.
So would you buy Twitter here?
I don't have an opinion. I'd have to do some valuation work on it after what it did today. But we currently don't own it, and it would be something that we would have to do some deep due diligence on before we did it.
All right, we will leave it there. Thanks, everybody. Appreciate your time tonight, and we will see you soon. We've got much more ahead on this busy edition of The Closing Bell. Disney earnings due out any moment now. We will bring you the numbers the moment they hit the tape. Then Bob Iger, Disney chairman and CEO, will talk with me.